Hi, welcome to Urban Insights. I'm Jayashree Kuruk. I have with me Sudhir Pai. He's the CEO of Magic Bricks. And today we're talking about the trends of 2024 that will have lasting impact on 2025. So, what have we come through and what are we going towards? Hi, Sudhir. Thank you so much for joining us. Uh, Sudhir, what are the big trends of 2024 that you think will carry on into this year?
First of all, a very happy new year to you, Jayashree, and to whoever is listening to this podcast. See, I think the last 3 years, particularly after COVID, has seen a sea change in the entire real estate market compared to what it was in the 7 years preceding that. I mean, today, if you go to most people and tell them, hey, something like a lame duck market between 2014 and 2020, most people would find it hard to believe, right? So I think one change that's there for everybody to see is that I think the total volume of transactions and the price has now hit a new normal, right? So I think that has certainly happened. It's here to stay. I think the second broad trend that we are seeing is premiumization of the market. I think that's happening across categories. It's happening in mobile phones, it's happening in automobiles, it's happening in real estate as well. Real estate is a little different because I think post COVID, one trend that we had seen and it's continuing is the demand for slightly larger homes. And second is the demand for better amenities in the property, right? So I think premiumization in the sense of wanting an extra room in the house for people to work, or for and given that people are spending more time in their homes today than they used to, thanks to hybrid working or work from home, etc., the demand for more amenities and for better homes, I think, is another trend that has played out over the last 3 years and I think is here to stay. Outside of that, I think one contra trend is that affordable homes as a percentage of the total market has actually fallen. If you go back 4 5 years, it used to be maybe homes which are less than 50 lakh used to account for 40 50% of the total searches on the platform. Last year it was 20%. The year before was 20%. Last 12 months it has been just 16%. So it's falling as a share of overall transactions. Tier 2 cities are also catching on to the party. So we are seeing a lot of action in both holiday destinations like Goa as well as religious destinations like, let's say, Mathura or Ayodhya, right? So a lot of tier 2 cities, and of course the tier 2 cities which otherwise are have got closer to the big metros thanks to good strong road connectivity, they are of course doing very well. And outside of this, I think something that is linked to the strong price increase that has happened in the last couple of years has been the return of investors to the market, right? So today our data or dipstick data indicates that only about 40% of the total number of buyers who are out there in the market are end consumers, right? So really, uh, a larger percentage of the people who are searching homes today are actually either looking for homes as an investment or as their second or third home. So I think in many ways, if you see all of these trends, very very different ground that we are on today as compared to what it was 3 or 4 years ago.
And in 2025, do you see the premium homes continuing to sell? And if so, what defines premium homes? What is the definition of luxury? Has that changed as well?
I was referring to our internal definition of luxury. Of course, based on the market and the consumer, people will use different price benchmarks. So, what I was referring to is properties which are greater than 1.5 crores. So today, those properties, which you can argue is not luxury, they are premium homes in some sense. They account for a strong 35% of overall searches, right? And luxury as such would be properties which are greater than 5 crores, let's say. And there is strong traction even in that end of the market. Now, Jayashri, I think we'll all know that real estate prices rarely come down, right? So when they go up, they either tend to rise further, or in a tough market, they tend to stay where they are. But they rarely, if ever, they tend to come down. So in response to your earlier question, is premium homes or prices likely to stay? I think they will. And what we are seeing on our portal so far, it looks like there is a little more legs to the market. While the price growth might slow down, we think there is room and headroom for prices to continue to be up a little more.
What has the consumer response been to changes? You did mention that consumers are the searches have become more premium, but I'm sure the need at the base of the market has not gone away. Has the consumer stopped searching because there's no stock in the market?
It's a mix of both. You're right. I mean, I think the supply in the less than 50 lakh homes is drying up very, very fast. I think the consumer is also responding to the fact that the market has gone up to the higher levels, so which is why I think they are also responding, and therefore searches have moved to the price brackets that we just discussed. But if I was to take a step back and look at what has changed from a consumer response, because that was your question. See, I think the following. Compared to a few years ago, uh, today people are deciding on buying much faster, right? So 3 years back, it used to be a buyer's market entirely. Properties used to stay in the market for much longer, and as a consequence, buyers used to take 6 to 8 months to decide before buying a house because prices were going nowhere and properties were available. Today, both have changed. If you wait too long, you're going to pay more. If you wait too long, the property of your choice may not even be available, right? So I think one thing that has changed in consumers' actions is they're deciding much faster. I think the second thing that has changed is, I think, largely attributable to RERA and the fact that all these fly by night operators have largely exited the market and there are much better crop of developers today around. I think the consumer's risk taking appetite has gone up. And we are seeing that manifest in a few ways. One, few years back, ready to move in properties used to rule the roost, right? So if you go to a consumer, I will buy something that I know I will get for sure, or I will buy something where I can see delivery in 12 months. I am not going to touch properties which are somewhere in the future and I don't even know whether I will get them. That has changed. We are finding properties where possession dates are 2028, even 29 selling, right? Under construction homes as a percentage of overall searches has beaten RTM, which used to be the case if you remember in 2014 and prior. So I think that's the second thing. I think the risk taking appetite has gone up. And third, I think, see, when property values rise, not just for people buying or selling, but even if you own a home and you have no plans to transact, there is a general feeling of financial well-being because your net worth rises, right? And I think that has happened to a lot of people. And given the strong property prices in the last few years, a lot of people have made money in real estate as well. So I think that is also prompting risk taking from consumers wanting to buy a second home, a third home, and looking at it as a good investment alternative. So I think these are a few consumer trends that are very interesting. One is this ability to take more risk, which was not there earlier. At least they were scared in real estate. And the second is buying much faster.
Normally, when the prices go up, more people tend to look for rental properties. Now, Magic Bricks is the place where you know everything about rental trends, right? Tell me something about what have you noticed in the last 1 year, and what do you expect will happen this year?
Well, it's been a rounded market. This bit of property prices have risen a lot, so let me stay on rent. Unfortunately, has not played out that way because what's happened in the last 2 years is rental prices have also shot through the roof, right? And they continue to rise. So if you look at last 12 months over the previous year, when in the previous year itself rentals had risen by 20 to 40% based on the micro market you're looking at. On a 20 to 40% base, last 12 months has seen a further 15% escalation in rental prices, right? Yields are at all-time high, 3 to 4% based on the market you're looking at. So for most consumers, rentals, or at least the perceived rentals because of yields, right, have made a lot of properties more attractive from a point of view of actually buying. If I have to pay so much rental and rental values themselves are going up so much, the case for buying becomes stronger. So it's not that rental is a escape route saying property prices have risen, let me stay on rent. No, rent also has gone up. And I think the high rental values are also acting as a trigger for more property buying, right? That said, rental markets are on a lovely strong wicket. Not just the rental values have gone up, and of course, a lot of consumers are not too happy with the rentals having shot up the way they shot up. But a lot of good societies, it's become hard to find a property on rent, right? So what we are seeing is a good society, by which I mean a society where demand outstrips supply. If a property comes for rent, that listing barely stays a couple of weeks before it's taken down, right? And there are so many societies where now there is a waiting list if you want to get a property on rent. So I think the rental markets have also done exceptionally well. So all in all, I think real estate has had a dream run the last 3 years, whether it's rentals, whether it's commercial, which is at all time high, or residential buying. It has been a 360-degree turn compared to what we were looking at in the COVID and the pre-COVID kind of years.
It's basically 2022 to 2024, right?
21 onwards, yeah.
21. Okay. How has the commercial and retail market done, and industrial market, warehousing, and so on? As far as the consumer goes, is it interesting for them because there are so many other ways of entering that market? What have you noticed?
I mean, at the cost of sounding excessively bullish, but the fact is, commercial has had probably its best year in a decade, right? And that despite a few years ago when a lot of naysayers were saying that the commercial market is going to be dead because of work from home. But work from home, I mean, pure work from home, by which I mean companies with say 365 days, you don't need to come to office. That I think has become a small minority. The vast majority of companies are either work from office or they are in hybrid mode, and both of them require office space, right? So I think commercial has had a fantastic run in the last 18 months, I would think. Vacancies are at all-time lows probably, or at least lows in the last 5 6 years. Properties have been both selling as well as leasing like hotcakes, and warehousing space in general has done well in the last few years, right? Because of so many macro factors that are sort of supporting it. But in response to your question, is has it done well from a consumer point of view? The answer is not really, because very few end buyers or consumers, retail consumers, they're really in the commercial or the warehousing space, right? So I think that's more for institutional investors, or maybe for commercial buyers, not so much for the retail or the end consumer.
Okay. What about REITs and SM REITs?
I think they continue to be niche products. We are still not seeing those at reasonable scale, including fractional properties. Uh, if I'm not wrong, I think it was SEBI, or maybe some other regulator. I think for fractional SEBI, and I think they took the bar up, saying that less than 1 crore one cannot invest. So which means you excluded the retail investor out of fractional. Uh, and REITs, I think the supply is so thin. There are barely two or maybe three listed REITs which are around. So very niche, small play, largely institutional investors. I think before it picks up scale, or before it becomes more mainstream, I think we'll need a lot more supply and a lot more education in the market before you see, I think, the common end retail consumer sort of adopt it. But for those institutional investors who have entered some of these segments, one would reckon they've done quite well.
It's still in the 8% yields that you can get out of proper property investment, also more than that you can get, right?
Yes, I mean, I think, well, in commercial, you do get rental yields itself of 7 8%, and whatever capital appreciation thereafter. So, yes, I mean, for people who are in that space, it's a pretty good bet.
We talked about how the markets have changed. It's been a premiumization of the market. What's happening in the small cities?
I mean, I think I mentioned this earlier. Small cities have also joined the party. And I think there are three things driving it. First of all, holiday destinations like Goa have always attracted buyers from a Delhi and from a Bombay. I think that trend is accelerating because supply is catching up. So now I think a lot of tier one developers from the big cities are also going to some of these locations and putting up their projects and selling land. As a result of which, I think some of these holiday destinations have also done well. Second is, I think I mentioned it. So religious destinations, Mathura or Ayodhya and many others, they've also done well because of all the because of all the reasons why they've been in the news. So a lot of property values in these markets have also done well. And third, I think, is the excellent intercity connectivity of roads. I think sea change in the last many years. Travel times have shrunk a lot, right? So therefore, many smaller towns which used to be 7 8 hours by road from big metros are today in many cases 3 hours 4 hours away. And naturally, spillover development of the big cities is going to go to those cities. Yesterday, the Prime Minister, I think, inaugurated a train service which connects Meerut to Delhi in just a few hours. I think couple of hours. It's naturally going to see development of many of these fossil towns, right, which were around the large cities. So I think, therefore, tier two towns, the way we used to see them, one, I think some of them are coming into the urban agglomeration, and therefore they will do very well from spillover benefits of the big towns. And second, wherever there is manufacturing activity or tourism activity or religious activity, some of those cities are seeing a fairly significant amount of traction.
So the people who have been outpriced in the large markets, do you see them going into the Mufassal markets and the the peripheral cities, which are well connected to the mother cities?
I think that will only happen if the transport infrastructure supports it. For example, if my employment is in a big city, right, and I need to work in a large city, then I will not go to the small city unless the connectivity is exceptional, right? So, in some cases where that's happening, for example, Delhi being connected to a Meerut, or on the other side might be connected to some of the Rajasthan towns. And if people can reach the large city within an hour, hour and a half, I think we will see some of that happen, because people who have been priced out of real estate in the big cities will at least have options in some of these cities. But where transport infrastructure doesn't support it, right, I don't think that's going to happen. In those cases, those cities will have to fend for themselves, in the sense they will grow, provided the local triggers for their growth exist, not because people are staying from the big cities there and moving for work in the big cities.
Is commercial also developing in those cities? Commercial, retail, that kind of thing?
I think commercial is doing much better in the bigger towns, right? Of course, there is activity, at least as far as retail malls are concerned. I think there is, it's far better spread and there's much better distribution. But if you look at grade A commercial, I think the big action continues to be in the top cities, right? For example, in South, a lot of GCCs, as they call it, the global capability centers, they continue to come and continues to trigger commercial activities. The BFSI space, for example, accounts for a significant part of commercial uptick, continues to be a big city kind of play. So I think while retail or maybe hospitality is expanding in some of these tier 2, tier 3 cities, if you look at grade A commercial, at least the large, big spaces, they continue to lean more in the big cities.
Sudhir, you moved into services from pure play listings. Magic Bricks did move into services as well. What are the services that consumers are looking at now? What are the trends you see there?
So we moved, Jayashree, thanks for the question. Allows me to tell your viewers a little bit about what Magic Bricks is up to. So we were historically a search and discovery platform. People would put up listings on Magic Bricks, and then buyers could come and find the properties of their choice. So we moved from a search and discovery platform into full stack. And our objective in doing that was we wanted to be with the buyer until he or she found the property of their choice, right? And search and discovery is what happens at the early stage of property buying. The next stage of property buying, typically, or renting, is typically when consumers do site visits. And the last stage is the transaction and the post transaction phase. So if you simplify, there are these four stages of any property cycle. And when by Magic Brick saying we are going full stack, we wanted to have a presence in all four, right? So we are putting up, and still work in progress, services and products which are there in each of these four stages of property buying. So what we've done so far, we have a home loan distribution business which comes at the transaction stage. We've got ourselves into the home interior space, which comes in the post transaction phase, right? We have set up a site visits business, which is in the second stage, which happens immediately after search and discovery. So if you notice, we already have a sprinkling of services in all the four stages of property buying. Uh, we will go deeper into services, by which I mean valuation services, legal services, maybe some smatter of property management services, etc. The idea is to complete and offer a full suite of services that makes property buying more convenient, more easy, right, for most buyers. Doing the same with sellers too. So, for example, earlier a developer would consume largely, ad services of Magic Bricks. He could have advertised on the portal at best. But today we offer a full suite of services for the developer because apart from ad services, today he can buy a site visit service. He will get consumers who will end up at his site. We have recently done an acquisition of a visualization company called as PropWiz. So if he's putting up an experience center or some tech so that people can experience his projects better, that acquisition will help him achieve those goals. And there are a bunch of value added services in the form of editorial, research, content, data that we are also giving to developers to help them make better choices on really what to build, what is likely to sell.
If you look into 2025, is there anything different that you're going to see? Is there something that was just kind of simmering under the surface in 2024 that you think will uh, break free in 2025?
I think that's a great question. So I'll tell you some things that are likely to continue, right? So, for example, in the last many years, I think one trend was how do you create more and more transparency in the industry. I think that will continue. It's been an ongoing piece. We have done our bit and will continue to do our bit. So, for example, Magic Homes that we launched, we've aggregated all RERA data, right? So today a consumer can find most of that information very easily on the portal itself in a very easy to read format. So work like this and others to improve transparency, I think that is going to continue. The second thing that will continue, I think, is convenience, right? So gradually remove friction points from the entire property buying journey, so that making it not just easier for people to buy, but also reducing anxiety, right? A fair bit of work has already happened. I think property buying today is so much easier than it was a decade back. And I think more work on that will continue. But response to your question, these are ongoing trends, ongoing improvements, incremental improvements are likely to happen next year too. What is likely to be dramatic is your question, right? So I think one thing to watch out for continues to be tech, right? Tech has made enormous differences in the last one decade. And I think the big one to watch out for is what AI does, right? How homes are presented, how they are sold, how processes that exist today can be made far superior. I think a lot of possibilities exist on the basis of how AI shapes up, right? And I think 25 will be quite a defining year because if you notice how AI has played out, uh, if I'm not wrong, was ChatGPT 4 launched less than a year ago? And in less than 1 year, you see so many applications have mushroomed. I think give it another 12 months, it's likely to become more mainstream than we are thinking, right? So I think that is one significant trend to watch out for. The second one, and I don't want to sound like a wet blanket, but real estate has had a phenomenal run in the last 3 years, right? There are a lot of expectations that prices will continue to stay super bullish and we might have another big year of another big price increases. That might moderate, right? I think prices have run up quite a bit. So we might see a little moderation both in terms of transaction velocity as well as prices, which I think frankly will be good for the market. So our advice is, while there's been exuberance of nothing can go wrong in the last 2 years, but I think we have already stepped into 25, but as we get into the next 12 to 18 months, I think it pays for everyone uh, to be a little more mindful, a little more cautious. Things are still great in the real estate market, but rather than crazy exuberance, being a little more mindful and stepping a little more cautiously, I think will pay off much better.
One arm of the real estate industry that's doing phenomenally well, I mean, than earlier years, is construction materials, construction products, building materials, gadgets, home gadgets, and so on. Uh, has this played out in the Magic Bricks arena anywhere? Are consumers demanding more? Are they looking for, you know, it's not just gimmicky things. They want to make life easier. And when you invest in premium homes, you also invest in better quality materials, better, newer products, uh, more sustainable, and so on. Do you see that happening anywhere? Have you noticed it?
I hope I've understood your question right. But see, one consumer response or consumer demand for better amenities is definitely on the table. and we are clearly seeing developers respond to that, right? So I think every new launch, I think the quality of the product, by which I mean the quality of the homes, features and amenities that it's coming, it's getting better and better over time. So whether it was tech-enabled homes or IoT, which was there earlier, to creating more social infrastructure or sports or community living, a lot of those things are very much on the table, and I think developers are very mindful. But if your question was more on construction material or how to speeden up construction time,
People have become more demanding, and the industry has responded. Whether it's tiles or taps or gadgets and things like that, they have become way more responsive to consumer demand, and that industry seems to be doing very well. There is a lot of money flowing in there.
yes, I think I don't know how and when this is likely to happen, but if personalization in some way uh, could come in, I think this could take a life of its own. For example, a lot of homes are still standard homes, right? So if there's a project being built, while a lot of amenities have gone up for the project overall, all houses, one can argue, still look the same, right? By and large, you'll get a choice of two or three types of tiles, might be two, three types of paint, maybe, but it's more or less your home is not too different from your neighbors unless you do the interiors differently. But I think there are a few developers, but they are in the luxury space. I think if the mid-tier and the regular home developers figure out how to personalize home, I think there is both a price advantage. People will be willing to pay more. At the same time, I think it will make every home unique, right? No two homes are the same, like what we see in the US, right? And I think that might take a life of its own. So maybe, I don't know when it will happen, but I'm sure at some point of time it will.
One last question, which is green is one big green and sustainability is a big piece in the narrative. Are you seeing it playing out in the real estate sector from the consumer side, from the developer side? After all, we are very close to 2030 targets, right?
Well, uh, honestly, not so much. I think a few years back, the percentage of projects which used to advertise lead compliance or many of these, while some of them are still there, but it's not as if it's a mainstream trend. I think the fact is people are more aware of environment and more so of climate. But is it something that is swinging a property decision? At least in India, I don't think the answer to that is yes.
And the secondary markets are doing well, or if it's largely the primary markets?
No, I mean, you'll know you've been doing real estate all along. The two are joined at the hip. I mean, it's rare to have a situation in which secondary does well and primary is struggling and vice versa. Typically, primary markets tend to lead, right? And secondary markets follow, both in terms of pricing as well as in. So I think it played out just that way even this time. But secondary markets are, of course, doing very, very well. Yeah, but the contra trend continues to play out. When markets are not doing well, owners want to sell. And when markets are doing very well, then people actually tend to hold back, thinking, hey, prices are going to rise even further. So one slight contra trend is in strong markets, listings fall a bit. That's just because people want to wait to see, can I get more? But otherwise, the markets are doing very well. I think people who want to sell or rent their homes are finding buyers, finding the prices they want, and therefore properties are staying in the market for a lot shorter duration than they were earlier. So doing very well.
Thanks so much, Sudhir. This time I talked about the consumers, the developers, and so on. I do want to come back to you at another point with institutionalization of real estate, the co-living, co-working, and so on. But I think that's too much to put into this show, but I would love to come back to you for that.
Let's do that.
Thank you so much, Sudhir. Found this video useful? Please subscribe to this channel for more such videos. Do like and share with as many people as you can.